YouTube channel, please also turn off your camera. My name is Rikapolis. I'm the National Content Manager here at JDRF. And on behalf of everyone, I'd like to welcome you tonight to our Let's Talk T1D educational series. We're very excited to present you with more information on financial planning and the new rules around the disability tax credit and the registered disability savings plan. Our speakers will have approximately 45 minutes for their discussion, and then we will open it up to your questions. We are anticipating a very large group tonight. We sold out. We had 500 registrations, so we'll do our best to get to everybody's questions, but if not, there is contact information that will be sent to you after tomorrow, and we can hopefully answer any questions then that we don't get to tonight. So I just wanted to talk a little bit about JDRF if you're not familiar with us. We are the global leader working towards an end to type 1 diabetes through both research, funding, and advocacy. We also support people and families in the T1D community from the time of diagnosis by helping those living with T1D to have better, healthier, and safer lives while we all work to find a cure. This education series offers information on a new topic every other month. Our next one and last one of 2022 will be on diabetes technology, featuring speakers from 4 device manufacturers on advanced glucose monitoring and insulin pumps. We also host a virtual connection series on the 4th Wednesday of every month, and this is an unstructured opportunity to connect with other people with no formal programming. If you want to learn more about either of these, you can visit our website at jdrf.ca, and we will also send information in the email tomorrow. So just another quick reminder, there is a hand raise button which you can use, or you can post your questions in the chat, and we will do our best to get to as much as we can before the end of the night. And again, a reminder that this is being recorded, so please make sure your microphone is muted and your camera is off if you don't want to be recording. So now I'm very excited to introduce you to our speakers tonight. Rosalie Sarasua, Rosalie, our Volunteer and Community Engagement Manager from Eastern Canada, will be presenting on the disability tax credit. And she will be followed by our speakers from RBC, Marie-Eve Dion, Regional Director, RBC Financial Planning, Andrew Daguet, Relationship Manager, and Tanya Provencher, Financial Planner, who will talk about the RDSP. And the total for both talks will be approximately 45 minutes, and then we'll get to our Q&A. So without further ado, I will get this started and turn it over to Rosalie.
Thank you. Hi, thank you, everyone. Thank you for joining us this evening. My name is Rosalie Sarasua, and I'm the Volunteer and Community Engagement Manager for Eastern Canada. I am doing the portion on the disability tax credit. This has been a presentation that I have created over the last 4 years and delivered about 12 times. And hopefully, and not hopefully, thankfully, this year we have some really much better news than any other year before. So that's exciting. I also wanted to remind everyone that we are recording the session. So if you do not wish to be on our YouTube channel, please turn off your cameras. So I'm just letting you know. So let's get started. So I'm going to chat a little bit about tax credit for medical expenses, the disability tax credit, and then I'm also going to pass this along to our partners at RBC, who have generously volunteered their time today to talk about the registered disability savings plan. So the tax credit for medical expenses, I'm going to just briefly go over this. Tonight, we're going to be talking about a lot of things that are tax credits. Tax credits mean that they are non-refundable tax credits that reduce the tax you pay or have to pay. So that's what happens. It's not a monthly sum that you get. It is a reduction in your taxes owed, and that's a non-refundable tax credit. So this part is medical expenses. So if you paid for healthcare expenses, you might be able to claim them as eligible medical expenses on your income tax return. These expenses include a wide range of products, procedures, services such as insulin pumps, all medications, needles, travels for appointments, if long distances, diabetes, dogs, etc. There's a huge list. So I really encourage people to save all of their invoices, all of their everything they do in terms of their diabetes care so that they can get tax credit for medical expenses. This absolutely will depend on your income, and so that's what it's important. It's a non-refundable tax credit, which means it's 15%. That means it reduces what you owe. You need the receipts. The admissible amount are your total medical expenses you've paid minus the lesser of $2,421 or 3% of the revenue of the person making the claim. So this is something you should discuss with your accountant, or it's something that your TurboTax or one of these things will do for you automatically, but you need to take the time to calculate all of your expenses. Normally, the person with the lower income in the family will take the credit. So for example, Mr. makes $60,000, Mrs. makes $100,000. So the medical expenses are $10,000. So the rule is the total medical expenses you paid minus the lesser of $2,421 for this year, or 3%. So for example, the outcome of this couple with a family income of $160,000, the federal income tax payable without the medical expenses, they would have to pay $18,885. But with the medical expenses of $10,000, they would now only have to pay $17,856. So they would get back just over $1,000. Either get back or pay less, depending on how their income is done. So now on to the good news about the disability tax credit. So the disability tax credit is a non-refundable tax credit. Also, the same thing. It reduces it that helps persons with disabilities or their supporting persons reduce the amount of income tax that they may have to pay. An individual can claim the disability amount once they're eligible for the disability tax credit. And this amount includes a supplement for persons under 18 years of age. So if your child has the disability tax credit, you can claim the supplement on your taxes. The purpose of the disability tax credit is to provide for greater tax equity by allowing some relief for disability costs, since they're unavoidable additional expenses. Being eligible also for the disability tax credit opens the door to other federal, provincial, or territorial programs, such as the RDSP, which we'll be talking about after this, the working income tax benefit, or the child disability benefit. So there is a lot of stuff that you can get extra with the disability tax credit. Now, the good news for this year, after many years of advocacy, of hard work with diabetes foundations, on June 23rd, 2022, Bill C-19 received royal assent in Parliament. And what that means is that the change allows any individual who is diagnosed with type 1 diabetes to automatically qualify for the disability tax credit, which means you no longer have to prove your 14 hours of time you spend taking care of your diabetes at least 3 times a week. You don't have to document your hours anymore as of the year 2021. There is a line on page 15 of the form T2201 that very clearly says this, that people with type 1 diabetes are automatically deemed qualified. Okay, so as of 2021. So what you need to know about this is patients with T1D still need to get the medical practitioners to sign off the form T2201 and confirm they have a type 1 diabetes diagnosis. So that form, which is 16 pages long, you still need to bring it with you to your medical practitioner, or have your medical practitioner do the online form. There is an online form directly for medical practitioners on the Revenue Canada website. Some doctors do it directly themselves, others don't. I don't know which provinces you live in or what the situation is with your medical practitioners. Sometimes there's a fee, sometimes there's not. So I can't say the way it will be for you, but all they have to do is attest and sign that you are a type 1 diabetic. So this change, medical practitioners no longer have to list the eligible activities, provide the minimum number of times, or provide the average numbers of weeks, average numbers of hours that it takes to do anything. It says, question 6 says on page 15, says if you have disability, if you have type 1 diabetes, you're automatically eligible. Please go to the last question. So in essence, your health practitioners only have to look at pages 15 and 16 of the T2201. You should fill in pages 1 and 2, and they have 15 and 16. However, the bad news of all this, it is not retroactive for years previous to 2021. It is not retroactive. So individuals can apply for the disability tax credit anytime during the year. I suggest you do it as soon as you have a doctor's appointment. Apply for it because you need your doctor's signature. So bring the forms with you to your next appointment. You can apply any time of the year. It can be retroactive before, if you already paid your taxes. Let's say for 12, we all have for 2020 retroactive. So apply anytime during the year. Okay, so we'll talk about this, that it's not retroactive. How to apply? Individuals are still required to submit the application. They still need to get their medical practitioner to complete the form. Pages 15 and 16 only. The form is very long. There are many parts, but it's only page 15 and 16 for life-sustaining therapies. The paper form has been updated to reflect the new change, which says exactly if the life-sustaining therapy indicated is for type 1 diabetes and you are filling the form for 2021 or later, you may skip to question 6. Individuals in this case are deemed to have met the criteria for life-sustaining therapy. So you can go onto Revenue Canada's website. There is a guide. The guide is very clear. I find it pretty easy to read. I'm not an accountant, and I found it pretty easy to read. So you can go right on their website to look at that. However, if you want to apply for years before, if you want to get retroactive payment, then you do need to show that you have to meet both these criteria, and all type 1 diabetics do meet these criteria, that the therapy is needed to support a vital function. Yes, you take insulin, it's needed, that's it. And the therapy is needed at least 3 times per week for an average of at least 14 hours a week. So yes, type 1 diabetics do qualify. And obviously they qualify because the government has now said they automatically qualify. So since the government says you automatically qualify as of 2021, it means they assumed for many years you have already automatically qualified. So people are getting yes. If their doctor signs off on this, everybody's getting accepted. So what is the criteria for life-sustaining therapy? So this is only for those who want to claim for years 2020 and 19, before. What counts is checking your blood glucose levels, preparing and administering the insulin, calibrating your equipment, testing the ketones, keeping a logbook. All this is clearly written on the Revenue Canada's website. Type 1 diabetes is the example that they show on their website. No other life-sustaining therapy diseases like Crohn's disease or kidney disease is shown. Type 1 diabetes is what they show as the example. What doesn't count is, when your pump is delivering the insulin, but it is counted when you're changing your pump. Counting your carbs is not counted. Buying your medication, going to appointments, recuperating after a hypo is not. So those things are not included, but it is you can prove your 14 hours with these 5 things. So tips for filling out the form if you're going to go for, so you would use, even if you're going to want retroactivity, you can go back 10 years. So if you're applying this year, you can go back up to 2011 or 2012, depending on what year you're applying for. You fill out Part A of the form for yourself before you see your healthcare practitioner. That's just all your personal information. I've found in the years I've been working on this, most healthcare practitioners will fill out the form if they know you're taking care of your T1D properly. You want to make sure the doctor writes that your condition is permanent. They do know it's permanent now, but it's permanent. And the CRA bases their decision on what's written on the form and on the subsequent additional pages. If you're rejected for the years before 2021, try again. So you would, if you're looking for retroactivity from the years before, you still fill out this same form, T2201, the one that is up there on the website now, but you would need to add, I always suggest that patients log all the stuff they do that counts up to 14 hours. It takes a couple days to think about everything. I do have a template or an example. I can send people who email me, I'll put my email in the chat. I could send an example of 14 hours on pumps, on pens, on all these different things, because it's quite easy to prove. It does take 14 hours a week to look after your T1D. We all know it's a 24/7 job, that's for sure, but they don't take into account all those things. But there are all over the internet a bunch of different examples on how to make this template. Typically, it takes about 3 or 4 extra pages onto this that you will either pull out of a Word document, write it all down, start an Excel form, something like this, and add it onto this form and send it to the CRA. So how much could you actually get? So as a maximum, you can get $1,299.30. So that's because the credit is $8,662. It's a non-refundable credit, which means they give you 15%. So what you could actually get is about $1,300 back at a maximum. That is depending on your income. So just take that into account. There's also a non-refundable supplement for persons under 18. And that would be a maximum if it's your child that has the disability tax credit, you get a maximum of $757. And it's easiest to upload the completed form onto my CRA account. That's what I suggest. You log on to your CRA account and you can upload the form and any other documents right onto the account. So children with T1D, this is quite simple. Children with T1D, even if you're going for the retro action from before 2021, so children, of course, the same as adults, they automatically qualify as of 2021. If you're going for before, please, the same thing, it's 14 hours. However, the parents can also include their time, so it doubles up. Kids are 100%, they get it. Always, even with the 14 hours, it's very rare that you hear that a child doesn't get the disability tax credit, because it is what the parent does and what the child does. If the child is waking up to check their glucose at 2 in the morning and it takes 10 minutes, the parent is waking up, that also takes 10 minutes, so that's 20 minutes. So it adds up. 14 hours is done real quick for kids. So, but it's the same it's the same criteria, okay? There is a child disability benefit that you can get if it is your child with T1D. It is a tax-free monthly payment made to families who care for kids under 18. So you must be eligible to get this for the child benefit, and you must be eligible for the disability tax credit. In order to get this for your child, you have to have the disability tax credit, but you don't have to apply for this. Soon as your child has a disability tax credit, this will come. This is a monthly payment. As of 2021, the payment is $248 a month. And of course, it gets reduced as your income goes up. So it's 248 if you make if the family net income is 71,000 or less, and then it goes down with the. But this you don't need to apply for if your child has a disability tax credit and you already get the Canada Child Benefit. So that's it for me. I see there's quite a few questions, so I'm going to look at the questions before we move on to RBC. Just real quick, I see the tax criteria. Well, I already did that. Share the deck. I could share part of the deck. I do have a form I could send out to anybody who emails me. So yeah, not anymore for Guy. You don't have to show anything 14 hours a day as of 2021. You don't need to, doesn't matter what you're using, but it's still easy to prove that you can 14 hours, no matter if you're using a pump, if you're on MDI, if you're any way you're doing it, you can still get the disability tax credit by showing the 14 hours retroactively. As of 2021, you have to show nothing. So it doesn't matter. It doesn't matter at all. So that's the tax criteria is there. I can send anybody the forms. And no, obviously I talked the automatic retroactive qualification isn't retroactive. So it can be a nurse practitioner, it can be a family doctor who signs, so it can be a diabetes care professional that signs the forms, yes. So if you submitted the T2201 in the past before, does it carry over? So typically you got an end date for your tax credit. So you have to look at whatever the end date of your tax credit was. Some people get it for 5 years, some people get it for 10 years, some people have got it indefinitely. So you must look at your end date and then the year that your tax credit expires. If it expires, that is when you will reapply for the next year. And if you're going to start reapplying as of now, it's going to be automatic. Can you edit your taxes? Well, when you can edit, if you send it in with your CRA account, you can ask for them to look over your taxes and it gets done automatically in the background. Okay, so that's easy enough. And is there a maximum salary? No, there's no maximum salary because it's a non-refundable tax credit. It's not something, it's a non-refundable tax credit, so there's no maximum salary. It's always going to reduce your taxes payable. Is it transferable? There is a different line on your form. Please talk to your accountant if it's transferable to your spouse. So you would put it on a different line depending on if your spouse is a dependent or not. Diabetes camp. Oh, that's good. Probably. I think that depends on your province in some cases if you get something back for babysitting. And that's about it. Yeah, that's a Mark. You said you're a healthcare practitioner. There's no way it would take 14 hours. Wouldn't sign the form. That's terrible. If you would like to prove to your healthcare practitioner it takes 14 hours, I suggest you do the exercise, meaning send me an email. I could send you an example and you guys can write it out according to your own situations. And every way, shape, or form, we've shown 14 hours, usually 16 hours at a very minimum. And that's sad that they won't do it. But as of 2021, they have to sign the form because even if you're not going to go for the retroaction, it's because now they're just attesting that you have type 1. That's all they're doing is attesting that you have type 1. So it's not one form per year. They give you a limit. Okay, so so they'll tell you your disability tax credit is from 2022 to 2032. You reapply in 2032. As of now, people are kind of getting them undetermined, so that means forever. So that's it. Okay, I'm going to, if a person can tell us type 1.5, how will this play out? This will play out if the doctor attests that you have type 1 diabetes. If you have to be insulin dependent, that's for sure. So that's it. For other tax-related questions, I really suggest that you talk with your accountant. They will be able to tell you how to apply better, not how to apply, how this is more advantageous for your taxes. So please discuss this with your accountant, and they will guide you. So I'm going to pass this along to our friends at RBC, and I'm going to pass it to Marie-Ève Dion. Marie-Ève, thank you very much.
Thank you so much, Rosalie. So can you confirm that you see my screen properly?
Yes.
Good. So good evening, everyone, and thank you so much to GDRF for the invitation tonight. It's a pleasure for my colleagues Tania Provencher, Andrew Dagger, and myself to be with you this evening to introduce or clarify to you the Registered Disability Saving Plan, the RDSP. So for tonight, we will look at the agenda. So we will see first and foremost, what is the RDSP, how to open the RDSP and also contribute to it. We will cover the most important part, the government matching grants and bonds. We'll cover the withdrawals and also some strategies. So I'll ask my colleague Tania to begin the presentation.
Hi, everyone. Thank you so much for being here tonight. What is an RDSP? Registered Disability Savings Plans, RDSP, is a savings plans intended to help parents and others to save for the long-term financial security of a person who is eligible for the